This is actually the fourth time since the start of 2024 where we've seen a 20% plus rally. The first three were probably built on the optimism of policy measures and did not fully materialize. And this time around, it is true that Deepseek can be different because it could directly feed into the increased profit over time. But Deepseek alone may not be able to fix all of China's problem. And so when we look at where the market is at the moment, after this 20-30% rally, from a valuation standpoint, HSCEI is now trading close to 10 times PE. That is more than 2 standard deviations above its 10-year average. And when we also look at our positioning indicator in aggregate, we think that the aggregate positioning in the Hong Kong market is also close to a 3-year high. So I think with the tariff coming in, with the MPC next week and some of the tech companies reporting earnings, we believe that in the next month or so, there could be some consolidation pressure. Thank you.
Yeah, what are you expecting from next week's NPC? Because, the economists and analysts' notes have been coming in thick and fast. I mean, do you believe that this is going to be a sort of market-moving event, or do you think it will be a bit of a nothing burger as far as some of the economic targets?
I think you mentioned earlier about the 5432, and that seems to be the current market consensus. But of course, things are quite fluid at the moment because I would imagine that over the past 24 hours, some investor may slightly increase their expectation next week because of the timing of the tariff. I think your colleagues and yourself mentioned earlier that the new rounds of tariff will be increased on just around the day when the two-session will start. So I think based on that, I think there could be some expectation whether or not from the language or maybe even from the actual policy, there will be some response to that. From our perspective, our base case is actually a 10 plus 15 scenario, i.e. 10% tariff in the first half and then an additional 15% starting in the second half. So based on what is happening at the moment, it is certainly earlier but slightly lower than we expect in terms of the aggregate tariff. So I think in that sense, the policymakers probably have some preparation, but perhaps the timing of that second batch of tariff may have been a little bit earlier than expected.
There seems to be some debate out there as to how heavily technology and AI is going to feature in the NPC. No doubt the economic targets are going to be closely scrutinised, but given that President Xi's endorsement of the private sector and some of the major technology companies seems to be an encouraging prelude, are you going to be paying attention to how much they talk about the private sector, or are you looking more at what they have to say about consumption?
I think the truth is probably both because they serve different purposes. The first one is that I think we've been through over the past month this re-rating based on the fact that now we realize that the Chinese technology can be competitive and cost efficient on a global scale. I think that is quite important, and it will likely continue to provide medium to long-term upside, assuming these technology adoption can drive further earning, which is what we're seeing on the technology side of things. But if you look at the earnings estimate for the broader market, that earnings revision has been relatively slow. And if you look at the onshore market, it actually is still quite subdued due to the PPI deflation. So if there is a little bit more optimism on the boost to consumer spending, then this upward earnings revision can propagate through to the rest of the market, and this will provide the second leg of the China re-rating. But as of right now, it felt like the bulk of the rally is quite concentrated on technology, software, and AI-related names.